Welcome everybody, and thank you for joining me on this webinar, Funding Your Business. So let's get started. I'm going to put up a poll for folks, and I'm curious to see how many of you have tried to get funding for a business. Now the poll's going to be up just for a few seconds, so go ahead and fill that out. All right, it looks like the majority of folks have tried to get funding. Another question I want to check with people. How many of you knew what your net worth was before you started to look for a business? Okay. Well, it looks like not as many knew that information as had tried to get funding. And in fact, that's pretty common. In the 13 years that I've been working with folks on a business, an overwhelming majority of people really didn't have an idea of their financial picture before starting the process of looking for a business. In fact, it was a few weeks ago, I was talking to a client in Oklahoma who was looking at a staffing business, and he thought he had over $500,000 in net worth. When we started to peel back his financial situation, what we saw was that his net worth was closer to $250,000. That meant that the staffing opportunity that we had been talking about was not as good a fit for him because it wasn't something he could afford. Thus, we started working on other opportunities. What are we going to cover? We're going to cover preparing yourself financially for business ownership. What does that include? That includes looking at your financial picture, and there's a couple pieces of that we're going to go over today. That includes your composition net worth and your credit score. After that, we're going to talk about different types of funding for you in order to actually go ahead and get a business. So, let me start with the financial picture. When you talk about financial picture, as I said, there's two things. There's a composition net worth, and that's made up of your assets and your liabilities. Assets are all of the things that you own, and your liabilities are all of the things that you owe. Now, I put up a slide for everybody who registered, so they have that. And I'm going to put up the same slide today, so if those who have already taken a look at that sheet can recognize it, and those who have not seen it before, here it is. So as you can see, there's two different columns: assets, what you own, and liabilities, what you owe. And if you look at the assets, you have a section for liquid, you have a section for your insurance, you have a section for what your house is worth, etc. And on the liability side, you have your debts, your mortgage debt, how much you owe on your house. You have liabilities to the bank, student loans, etc. What you do is you take your assets, you subtract your liabilities, and you get a total net worth. Now, I want to share with people that a lot of you may know what that information on that sheet looks like. Some of you may not. I encourage you to gather that information before you start, because that's going to give you the most accurate idea of what kind of business you can afford. If you're now got your financial composition net worth figured out, the next thing that you really need to do is start looking at your credit score. And you can do that with a free site, creditkarma.com. There's actually a couple different sites that could be either $1 or less, but we put one of those on creditkarma.com. Take a look. You're trying to get a score of 680 to 690 or higher. The reason is because most banks, lending sources, and even sellers will be looking for a reasonably high credit score in order to want to do a deal with you or want to fund your deal. If in fact you find that your credit score is below 680 or 690, the government gives you an opportunity to look at your credit report for free once a year. That site's annualcreditreport.com. Take a look at that. See what kind of derogatories or negative information or problems you have, and then work on getting them fixed. We do have resources for folks that would like to work on fixing their credit, so please don't hesitate to reach out. Let us know if we can help you with that. So basically, there's a couple of pieces to get yourself prepared financially. Get a sense of your net worth and get an idea of your credit score. Comb through the report if it's not 680 or 690 and see if you can get it into the high 6s or low 700s. Look at your assets and your liabilities. Make sure you understand what your net worth is and what your cash on hand is. Once you determine your net worth, your liquidity, your credit score, you can start thinking about what type of funding that you want to do. Now, there are a few different funding sources. And why is it important to think about funding in the first place? Because studies have shown that 82% of businesses fail because of cash flow issues. Therefore, it's important to have enough money when you start in order to make sure that you could stay in business long enough to reach profitability. So, before we jump into the different funding sources, I want to take another poll. Again, it'll be up just for a few seconds. How many of you would prefer to use your own money to fund a business? All right. It looks like about 60% of you. Now, how many people of you would prefer to use other people's money? All right, it looks like about 30% of you. I would imagine that if there's a 10% missing, you're just not sure. And again, that's something that we can cover later. So we talked about different types of funding. There's really two major categories for funding. There's your money and there's other people's money. When we talk about your money, we're talking about cash you have on hand. If you looked at that asset sheet, you'd see that the liquid cash is really what's in a bank or stocks and bonds. That's money you can use. If you have a house and you want to sell it because you're moving, or a second property or third property, you can raise money that way. You could sell cars or other valuables, jewelry, paintings, etc. That's one way to organize funds to start a business. Another way is using something called a 401k or IRA rollover. Now, the government has always encouraged people to start their own businesses, and they do this by allowing people to take money out of their 401ks or IRAs and put it into a business and start a business without paying penalties and without paying taxes for early withdrawal. How does it work? You're basically setting up a C Corp, and in that C Corp, you're starting another retirement plan. You're taking the money from your current retirement plan, putting it into the retirement plan for your C Corp, and then using that money to buy stock in your corporation. So for example, you might take your 401k money and buy shares of Coke, or you might take your 401k money, put it into a C Corp, and use that money to buy shares in your own corporation. Besides not having to pay taxes and penalties on that money, the government's taking 40% of the risk in the business. Why? Because if the business doesn't work, you didn't have to pay the 40% in taxes you otherwise would have had to pay to use that money. So not only is the government taking 40% of the risk of the business, you have capital to start your business with no debt, pay yourself a salary, and the best part about it is you're setting up a pension plan within that corporation, which allows you to refund your 401k. So whatever you took out to start the business, you can put in. I also share with people that when they think about their investments and how their investments are doing, the stock market historically has averaged 7%. Being in business for yourself, you're going to be averaging somewhere between 10 to 30% returns on your money. Again, those are averages, but even at the low end, that's often more than the 7% that you get from any other investment. Another way of funding a business using your own money is through what we call security-based loans. If you go back to that asset liability worksheet for your composition net worth, and you see that you have stocks and bonds, and in your portfolio you have $85,000 or more, you can borrow that money without selling the stocks in that portfolio up to 80% of your portfolio and use that money so you don't have to sell your stocks and you can pay that money back. The two programs be the securities-based loans or the 401k rollovers. They typically take about 3 weeks to do. The 401k rollovers typically cost about $5,000. And in general, I don't recommend using money from your 401k unless it's 50,000 or more, because the 10% it would take in order to pay to do the C Corp, et cetera, wouldn't necessarily be worth it. So if you have 50,000 or more in your 401k, you have 85,000 or more in stocks and bonds, these are a couple great ways to use your own money. Now, for those of you who want to use other people's money, okay, the most common way of doing it is through something called an SBA loan. Now, a lot of people think that the SBA is just a lending institution. In fact, they're not. You're actually borrowing the money from the bank. The SBA is guaranteeing about 80% of the money that the bank is lending you. So in case you default on that loan, the bank is going to collect 80% of the money they lent you from the SBA. So again, they're called SBA-backed loans, but you're actually getting them from a bank. Now, there's two kinds of loans that are pretty common from the SBA. One is a 7A loan. That's where you can borrow between $50,000 and $5 million. They're typical 7 to 10 year terms. You have to put 10 to 30% down, and you need a credit score of 780 or higher. The bank is going to use collateral, and for the most part, that's going to be your house, right, as collateral for the loan. You need a business plan with expenses and revenue projections for 3 years. They're going to require a resume, personal financial statements, and 3 years of tax returns. And you typically need between 3 to 6 months in order to get the money. The cost of an SBA loan is about $3,000 to $4,000. The other SBA loan that's pretty popular is a 504 loan. That's going to be an SBA loan that includes real estate and or equipment. Those loans are typically $500,000 or more. They're between 7 and 25 year terms, and they require 10% down. They don't need collateral from your home, because if you're getting real estate as part of the loan, they're just going to use that real estate as collateral. Again, a 680 credit score, 3 to 4 weeks in order to, 3 to 6 months in order to get that loan. Another way of using other people's money is through something called a business line of credit. Now, those require no collateral, no business plans, and a credit score typically of 690 or higher. You can get between $25,000 and $125,000. And if your spouse has good credit as well, you can get another $25,000 to $125,000. They take only a couple weeks to get, and typically cost about 10% of the money borrowed. So if you're borrowing $100,000, doing a business line of credit is going to cost you 10 grand. A third way of using other people's money is through equipment leasing. Going back up to the 504 SBA loan, if equipment's included, one of the ways to fund the business is to fund the business with an equipment lease. They're typically short-term, low monthly fixed payments, 3 to 5 years, and again, can take about 3 weeks to fund. The last way to use other people's money is through what we call angel investors. Angel investors are family members, parents, grandparents, siblings, or friends, or anybody who believes you're going to be a rock star in a business, or really loves the business that you're getting into and believes that you'll be able to pull it off. So again, I want to recap the different kinds of funding out there. The first is self-funding, and that includes using your own cash, a 401k or IRA rollover, security-based loans, so borrowing from your stock account, and the other one is other people's money. That includes SBA loans, business lines of credit, equipment leases, and angel investors. All right, so we've got the different types of funding. One of the things that I want to share with folks is why banks typically find funding or financing franchises much more palatable than non-franchise businesses. The reasons include franchises always have business plans as part of the business. So you can get a business plan from a franchisor in order to use that plan for a bank. They also have earnings histories and experience support. Non-franchise businesses, on the other hand, rarely have accurate financial data. In fact, typically 2% or less of non-franchise businesses that are worth $1 million or less have accurate financial data. And banks aren't particularly keen on funding businesses that a seller thinks it's worth. They're much more interested in funding things that they can know for a fact what that business is worth. So again, when you look at the different kinds of businesses to get into, it's much easier oftentimes to fund a franchise than it is to fund a non-franchise business. So we've got your financial picture, we've got funding sources. Once you have an idea of both of those, right, it's often time to get a sense of what kind of business you can get into. And the primary part of Envision Consulting is helping people figure out what kind of business to get into. Starting in January, we're going to do something called a CEO Launchpad. Now, this is a brand new thing we're offering. It's going to be a focus group that's going to include a number of different things that we're going to cover, and is going to help people with that process of figuring out what kind of business to get into, what time frames for starting a business are needed, and typically that's 3 to 9 months. We'll discuss, how many depending on the kind of business, and what it is that we need in order to get ready. So who is this January Launchpad group for? First, it's for those of you who are not sure what kind of business you want and might still have questions about the kind of business that fits your budget. Who else is it for? You know you want to move forward buying a business in 2018. You just want a little more hand-holding to get you started. You want to figure out how to find a real business and avoid throwing money down the drain and wasting your time. We want to help you avoid the rabbit holes that waste your time. We want to help you avoid expensive mistakes. Those who often do it on their own wind up spending money where they don't need to spend money. And again, nothing wrong with making mistakes as long as you learn from them. Envision Consulting is here to help you learn from your mistakes and prevent you from making them. What we're going to cover in these 5 sessions, we're going to cover your financial readiness. So individually and in the group, we'll make sure you have an idea of your financial picture. We're going to cover your relationship readiness. A lot of times people want to get into a business and they don't have the support of their spouse. We'll talk about how to make sure you get your spouse on board if we're going to start a business in the coming year. We're going to talk about your entrepreneur quotient. A lot of people wonder when they're getting into a business for the first time or after they've had a business or getting into a second one, how well they'll do. We have a way of helping folks figure out just the answer to that question. How well will you do as a business owner? The next thing that we're going to do is we're going to cover business options that make sense for you and talk about how to figure out what those options will be. Lastly, we're going to look at the big picture of a CEO mindset. We're going to talk about how to prepare yourself to run a business, which oftentimes is shifting from being an employee to being your own boss as a business owner, and what it is that we need to do in order to get into that CEO mindset so that not only can we start a business, but we can make a business successful. All right. So I want to take a few minutes and go through a couple of the questions that I've already seen slowly come in. If you've got additional ones, go ahead again and use that chat box. Okay, one from Atif. Can I get a loan from my local bank? That's a great. The easiest way to answer that is probably not, but it depends on the bank you use. most banks are not looking to do loans for startup businesses. They're looking to do loans for businesses that are at least 2 to 3 years old. Now, if you find something that's 2 to 3 years old and they have accurate financial data and can prove that the business is doing as well as it is, yes, you can typically get that money from a local bank. But we have a ton of resources, companies we work with that go out and shop your loans to particular banks that focus on lending to startup businesses. So again, you always can try, and we encourage you to do so. But in the end of the day, we've got plenty of resources for people, and we'll direct you to the right resources so that you can get the best loan and loan rates if you're going to go that route. From Cynthia, can I buy a business without having to put anything down? That's a great question. And what I would typically answer is probably not. The reason being is because putting money down gives somebody a sense that you have skin in the game. So let's talk about buying an existing business for sale. If you have no money down, what guarantee does the seller have of ever collecting? And if the seller is trying to sell his business, it's not because he wants to take it back because something happens to you. So typically they want to see a net worth, usually above the purchase price, and they want to see some skin in the game, typically between 30 and 70% of the sale price. That means that if something happens, you've got resources. Same for a bank. A bank wants to see skin in the game. So we can always talk about, if we don't have a lot of money, what kind of businesses we might want to start with, because there are businesses we could get into for $500, $4,000, $10,000, $15,000, or $20,000. And what I often tell people is business ownership is often like driving a car. The first car you drive is not the last car you ever drive. And for a lot of folks that we've worked with over the years, they start with one business. A few years later, they're in a second and a third, and each of those business becomes a larger entity. Okay, another question. What was the credit score that I need in order to be able to get a loan? Again, depending on the bank, and again, we'll shop that for you, it's typically 680 to 690. For business lines of credit, it's a little bit higher in the 700s. And again, the higher your credit score, the lower your rate or the more you're likely to qualify for. And then Andrew, do you have people you have worked with that I can talk to? Of course we do. For those of you who'd like to speak with some folks that we have done business with either this year or years in the past, we're happy to make some introductions for you so that you can get a sense of what it is that we do at Envision Consulting. Any other questions? All right. Well, I hope this webinar has been helpful. I want to share again that we're starting the CEO Launchpad in January, and we're going to put up a quick slide so that you can see where it is you can join. And I want to let folks know that if you join by December 31st, right, the fee for those 5 sessions, including coaching, will be $97. If you sign up before the webinar anytime in January, it'll be $157. So again, $97 if you sign up by the end of January, $157 if you sign up in January. I want to close by sharing that our next webinar will be later this month. It's going to be called The Dangers of Working for Someone Else After 45. Again, I want to thank you for joining me on Funding Your Business. Look forward to answering any questions and having you in our focus group, CEO Launchpad, in January. Thanks, and have a great rest of your afternoon.